This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In this video, I'll be going over the data sets and doing a quick technical analysis over the SPY and potentially looking at some other symbols. We'll see. I really want to keep this video very short. I will be streaming in the morning at 8 a.m., so I look forward to seeing many of you there. And with that said, let's go ahead and jump into the data. And this is again for February 18th, 2026. In the spirit of keeping this video very short, we did not have a lot of data for Tuesday. We had the ADP weekly employment change come in. It came in slightly above the forecast, but again, this is still very, very low. It needs to be a lot closer to 30, 40, 50,000 a week. Okay. The manufacturing index, I don't really care about too much. Didn't move the market really any. Now, going over Wednesday's data, we really don't have a whole ton in terms of very, very crucial data at 8:30 a.m. We have the goods orders and the housing starts. Really, nothing in here is going to be causing a drastic move out of the market unless we see um an extremely hot or extremely cold or cool data set within, that the housing starts or something that causes a panic. Other than that, these are usually not the type of data sets that move the market. Now at 9:15, we do have the industrial production data. Generally, again, this doesn't cause major market movements, so I'm really not anticipating anything out of the majority of earlier in the session in Wednesday to cause any form of market movements, really. We have the Atlanta Fed GDP now. They're expecting it to come in at 3.7%. I don't really have any opinion about that right now. Generally, this doesn't cause any major market movements, but we have been seeing the GDP now pulling downward, so very likely it will keep that at 3.7 or pull underneath that. The 20-year bond auction is at 1 p.m. Now, this is important. We very likely will be seeing the yield on this pull downward quite a bit, as we have been seeing the treasury yields pulling downward, and we've been seeing a lot of buying within treasury-based instruments like TLT, the HIG, things like that. So very, very likely we will be seeing the yields come downward. Now, at 2 p.m., we have the FOMC meeting minutes. I'm not really counting Bowman's speech tomorrow. Bowman really doesn't say a whole lot that moves the market. If there is something that causes a market movement, then, it will be at that 1 p.m. time slot. But other than that, I'm really looking forward to the FOMC meeting minutes. Now, granted, I'm not personally looking forward to reading them that much. I don't really think that these FOMC meeting minutes are going to provide a whole lot of data for the market, but I know that the market generally has been trying to look towards those FOMC meeting minutes a lot more, especially because the Fed really hasn't been communicating a whole lot lately about what their future monetary stance or policy outlooks are, other than pretty much we need to be cautious and just wait for the data. So people are interested in that, but really a lot of the very, very crucial data is coming out on Friday. That's when we have the core PCE, the GDP, personal spending, all that really important data. So I'm not anticipating much of this data on Wednesday to really move the market in any way, one way or the other. So
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
and going over the technical analysis as always, let's ensure the daily timeframes turned on, and let's ensure our moving averages and Bollinger Bands are turned on. Now, we did have a quote unquote bullish day today. It closed green, and very likely we do see the 5 month pull towards that 684.60 range, which means that the overnight currently it's at 684.15. It's been hovering basically right around that 684 range. That means that currently we are starting to retest the 5 month. Now, we did not have a true lower Bollinger move. We did not push into the lower Bollinger and hold that level for the close. So this was not a lower Bollinger move. Now we're retesting the 5 mile. From this 5 mile retest, either we're going to start buying towards the upside, which truly I don't think that's going to occur too much right now, or we will reject it and push further into the lower Bollinger. Now, we did close this inverse cup right here with, all the prior liquidity for, that bearish structure. And going over drawings, which I do apologize, they look a little sloppy right now. They do tend to shift a little bit when I open my phone or not. But one thing I want to point out first is that this major buying channel previously was back here. Okay, so technically we have broken through that buying channel. Um, when we shifted this buying channel, we've been looking for support to be bought up. And each time we've shifted that, it's because it's looked like support has been bought up. We've talked about how every time we enter into this, and I'm going to go to the 4 hour time frame for a moment, but every time we enter into this red liquidity range, we generally have a very large bounce outward. Okay. Um, with that said, we still have a lot of bearish structure here. And just ignoring this very large inverse cup right here, we do technically have an inverse cup and handle formed. And that, I'm going to mark it in red. Okay, so there is inverse cup and the handle, which actually does consist of a true handle because it is still below the height of the peak. Um, it did look like it was going to turn into a bullish cup, but remember, it rejected on the potential of pushing upward into forming, the completion of that cup. With the breakdown of that bullish cup, this is telling us that very likely this is trying to keep some form of bearish structure going. With this inverse cup filled, okay, and we know this is filled because both of these liquidity ranges have been taken. And now we are starting to see the push down again. Now, this inverse cup right now has not entirely filled out. Um, some might say it has, but from my technicals, I don't count it as a completely filled out cup yet. Still need to see this push down roughly about another dollar and a half to really fill that cup out. But from a liquidity standpoint, this does have all the features of an inverse cup. Um, with that expectation so far, that potentially this is the inverse cup, then we would be looking for, again, further continuation downward into the handle to push downward. Um, with that said, we are still below the 5 mile support. With the 5 mile being above us, that does mean that we can have a rejection downward. Okay. That would fit almost exactly into this inverse cup, which I know there's a lot of drawings on the screen right now. I apologize, but just try to focus on the red inverse cup here in this green line. The current price is right below where this, where the 5 mile is. So extremely likely we're going to see a 5 mile test. If things are going to continue bearish, we will see a rejection downward, complete this first inverse cup, and also push into the lower Bollinger. So that's truly what I'm expecting. However, we do need to remember that every time we have gone to this red liquidity range so far, we have seen major bounces towards the upside. Now, every one of these bounces have pushed us toward the upper Bollinger, but have rejected the upper Bollinger. So it's hard to say that this bounce is bullish currently. What I also want to highlight is that, and that's mainly that we're still within this consolidation channel, and we've been within this extremely strong consolidation channel for quite a while now. And kind of based on the rules of how consolidation channels work, we generally trade from the bottom to the, or the top to the bottom, bottom to the top, top to the bottom, and very likely bottom to the top again. Okay. This is just standard for how consolidation channels trade. So with that expectation, yes, there is upside to this, but we still need to see the 5 mile have that successful retest. So if we break through the 5 mile tomorrow, if we see actual buying at the 5 mile range, then that can give us a little bit more confidence that potentially we could be buying towards the upside. However, so far this has been very controlled selling. This is looking a lot like previous February, previous April. So really my bearish my bearish, flags are starting to really pop up everywhere. I'm starting to see a lot more weakness throughout the market, and we know that the Bank of Japan is still unwinding, so we're not out of the woods. With the moving averages still being bearish, and I'm going to hide the drawings for a moment. But with the moving averages still being bearish, and meaning that the 5 mile is below the 10 mile, the 10 mile is below the 20 mile, um, we're still far from out of the woods. Okay. Now, one of the good bullish signals is that we do see the ADL pulling up. Now, granted, I still think we're going to be pushing downward. Um, that's just my honest opinion. I've been seeing the VVIX holding extremely elevated, even though we did see today it pulled back quite a bit. It was all the way up at that 118 range. It pulled down. Excuse me, sorry, my daughter's sick and my wife's been losing her voice, so I'm starting to feel that coming on. But it did pull down to the 106.34 today. However, I do want you to take a look at this potential head and shoulders forming here. So if volatility really does want to run its course, then potentially we still do have a leg upward. Okay. Um, and that's kind of the bullish case for the market is that we pull upward, form this head and shoulders, pull downward, and start seeing volatility being defeated. However, again, um, this is still extremely elevated. And another thing that's elevated is, and I want to turn off the moving averages and Bollingers for a moment, is the USD JPY. Now, what I mean by elevated is that when we saw the prior unwindings, and let's go ahead and show drawings here, we saw this pull all the way from the top up here, all the way down to the bottom of this channel. Okay. All the way bottom down there. And each time it hit almost that exact same range. It's basically that 139, 140 range. The prior unwinding, and again, this was January through April. This was um, August through October, if I remember correctly, or the end of September. In 2024, we see that exact same structure. We see it being extremely elevated and pulling all the way down to that 139 range. Um, Prior to that, we see that before it moved up all the way towards that 162, that it liked to hold around that 139, 140 range. So what I'm trying to say is that the yen is still extremely, extremely weak, and because of that, um, these Bank of Japan interventions haven't been enough. Okay, we are still not seeing the move downward yet, and truthfully, this move downward should lead to about there. Okay, so it's very hard to look at any of this overnight buying, any of these potential bounces, and say that, oh, I'm bullish on that because truthfully, the Bank of Japan's saying they're not. They're saying that they still have a lot of room to go before they have intervened with the yen enough to allow it to pull back up again. Um, and by pull back up, I mean for the yen to weaken it again. And we can see this within the DXY and FXY. We're going to pull up the FXY first. This is the yen, the actual yen. So you can see how this runs kind of inverse compared to what we saw with the USD JPY, where you see buying to the upside. This is when these unwinding events occurred. And again, we see how within the yen, we see it pull upward and strengthen towards generally this 64 to 65 range. We're still very far from that. Okay. We still have a lot of room to go before we're anywhere close to that area. So, are we out of the woods yet? It's looking like we're not. Um, but again, things can change very quickly. If we do see buying to the upside above the 5 mall, if we see actual bullish structure forming, and at this point, we need to see bullish structure above this bluish consolidation channel, or that range prior or above that um geez, I'm losing my train of thought. Above that consolidation channel, the white line, this blue range, we need to see buying all the way above it to really signify that yes, the markets are bullish. Okay. Um that seems like a very large move. However, this has been extreme, extreme, extreme consolidation. And so far, this is just telling us that the dealers really like seeing people buy to the upside so that they can sell it. Slow buying to the upside, dump it. Buying to the upside, dump it. That's been the structure all the way since, I want to say, what, November? Something like that. Since basically mid December, they've been holding that exact same structure. And this looks like a very, very similar range prior to the massive sell-off, last year from February to April. So we have to be very, very cautious. Okay, it's time to start being extremely cautious here. It's not time to start trying to buy the dip. Now, if we get into the lower Bollinger Day 2, which again, we did not push lower Bollinger Day 1, we have to close at or below that level to really signify that we pushed the lower Bollinger. Um, if we actually push that level and we get into the lower Bollinger Day 2, truly get that lower low of the Day 2, then that becomes a buying opportunity, even if the market is going to continue dumping. Um, Lower Bollinger moves are almost always a buying opportunity. It's just you have to buy enough time into it. So we'll discuss that once that move occurs. But currently, I would not be bullish. We see, a little bit bullish price action going on throughout. The VVIX pulling down throughout. Um, the corporate credit is holding very, very strong still. Let's see, corporate credit liquid holding very strong. We're seeing quite a bit of buying to the upside within liquid. Then the HIG, seeing a little bit of selling starting to occurring, but again, nothing major. I wish I could show you the shares on my screen, but there's actually two very, very large purchases in the after hours. One for roughly 3 million shares and one for 1 million shares. So that's, easily over $450 million of uh, share buying just within the after hours today. Not standard for HIG at all. Excuse me, I'm losing my voice. Now, one thing I want to look at is Bitcoin. Just I'm losing my voice, everybody. But I want to look at Bitcoin because remember how I've been talking about how the market and Bitcoin share a very, very strong correlation? If we see bullish buying within Bitcoin, then we very, very likely will be seeing that buying within the equities as well. Now, we exactly haven't exactly been seeing that buying within Bitcoin yet. Um, so again, just another little signal that's telling me that potentially this, excuse me, I'm losing my voice. Actually, this selling isn't over. Okay. Um, yeah, I think we're gonna end it there. Let's go ahead and take a look at semiconductors really quick. Seeing a lot of that same type of price action within semiconductors. Semiconductors pulled down all the way to 345 today, below that 20 month. However, um, pulled back up. It looks like it was a 20 month test. Um, I don't think that's the end of it, but potentially it could be. Some of these 20 mile ranges, some of these 20 mile tests only give you barely any time underneath that 20 mile before we see massive buying. But with the Bank of Japan continuing to unwind, with some of the conditions that are present right now, I would still be very, very skeptical of the upside. I'm still holding my Soxal calls. Sorry, I can barely talk right now, everybody. I'm still holding my Soxal calls. I still see the upside, but potentially we could be pushing down quite a bit. So really need to be prepared for that. If you're, within those Soxal calls. Now, SOX S, the bear ETF, is going to be having a reverse split, I believe, on March 10th or March 18th. So be aware of that. Don't be taking long contracts in that currently. Was asked about Oracle today. I did not get a chance to respond, but I did want to take a look at it, even though my voice might be cutting out right now. Oracle is below its 200-day moving average on the daily time frame. Generally does not like to hold that range very long. Within the weekly time frame, it did pull down to the 200-day moving average, and so far is seeing a little bit of a bounce. Within the daily time frame, did see the lower Bollinger move, which we did talk about contracts on that day, I believe, and those would have been absolutely massive contracts. Um, from that lower Bollinger, we saw the 5 mile tested. From the 5 mile being tested, we are seeing a little bit of buying. The 5 mile is now above the 10 mile, so that is somewhat of a bullish indicator to the upside. We do need to see buying above the 20 mile. We need to see that level held, and we need to see the 5 mile pull above the 20 mile. After that, you're still not completely out of the woods yet, just because of how pushed down the moving averages are. Because after you get the 5 mile above the 20 mile, you then have to see the 10 mile pull above the 20 mile, which that's going to take a rather significant amount of time. It can take just the 10 trading days, but each and every single one of those trading days pretty much has to be above that 20 mile level for it to really pull that 10 mile above that 20 mile. The ADL still shows a little weakness. I'm not seeing any major signals suggesting that we're going to be seeing um, any very, very large buying to the upside yet. And in fact, did see buying to the upside from this 5 mile test, from this 10 mile test, we saw almost up to the 20 mile. We did see a rejection from that level, and from that level, we retested the 5 mile and slightly rejected below it. So we're not out of the woods on Oracle yet either. Um, Personally, I would try to wait for another lower Bollinger push because it does look like it can occur. However, if we start seeing a lot of the market pulling upward, if we start seeing this 20 being crossed over with the not only the price, or the market price, but the 5 mile and the 10 mile, then that will be, you know, much, much further indicative that we will be seeing much larger buying to the upside. We also do want to be seeing the ADL pulling upward quite a bit. Again, this ADL is absolutely beat up right now. So, um, truly, we want to see very, very large buying within this ADL. This ADL is almost running negative on the daily time frame, and that's, no bueno. So, okay. With that said, again, very, very likely the expectations for SPY, QQQ, SOX is to retest that 5 mile. Either we're going to see immense buying from that 5 mile level, and from that buying, we will very, very likely push above the 20 mile, or we're going to see a rejection of the 5 mile, and very, very likely from that rejection, see a push well below the lower Bollinger. Okay, that's the expectations. Again, keep your eyes on the VVIX. This is a super, super good indicator to tell you that, if the selling is exhausted, then the VVIX will be telling us that. Make sure you keep your eyes on the yen because again, the Bank of Japan is unwinding positions. They are intervening within the yen. They are trying to strengthen it, which means that they will sell securities, they will sell crypto, they will sell precious metals in order to buy the yen and, you know, strengthen that position so that their monetary system doesn't just implode. Okay, ending the video there. I will be streaming in about 5 hours from now. So I hope everyone has a great day. I will talk to you in a few hours, and yeah, I think we covered it all. Let's have a great day tomorrow, everybody, or today, depends on when you're listening to this.